Good evening, everyone. We are going to start the session. Right. I am Nishant Adhikari. I am going to discuss 2022 December paper, and I will share my screen, and you may see the paper, and we will go through the paper from the beginning. Right at the beginning, I will explain. I think everyone can hear me. First, I will explain the paper structure. Right. You have 3 hours. This is a 3-hour paper. You will receive 15-minute reading time, and you can read the paper and you can get an idea about the questions. Thereafter, there is the planning time, reading and planning time, 15 minutes, and you will receive the 3 hours for the entire paper. Right. This paper has 3 sections. First section, 10 MCQs, which gives you 20 marks, and section 2 have 4 questions, each will give you 10 marks, and third section, the long essay type question, 20 marks each. 2 questions will be there, 40 marks will be there. Right. With having that idea, we will move to the section 1. Remember this section solely from MCQ questions, right? Multiple choice questions. Sometimes you might have to fill the blanks. Right. Okay, first question. This is relating to the modern manufacturing environment in your syllabus or first lesson. We'll read the illustration. A manufacturing company is planning to adopt the just-in-time manufacturing system, JIT system. That means they are not keeping any inventory. They will manufacture based on customers' request. Which of the following is not an example of the expected changes that would arise as a result of adopting JIT manufacturing system? If you adopt a JIT manufacturing system, just-in-time manufacturing system, there won't be a change. You have to identify that particular statement. Remember, in a JIT environment, you will manufacture based on the customer's requirement. Therefore, we will call it a pull system. It's not push, it is a pull, because you will manufacture the goods based on customer demand. Right. There are 4 statements given. Workers would be trained on overall production aspects so that they are skilled to work on multiple processes. Just that's correct. Because if you adapt a JIT, if you are in a JIT environment, definitely you have to know about all possible areas. Overall understanding required. It will be given. Number 8. First answer is correct. Therefore, it is not an example. Not an example. Therefore, you can't consider it as an answer. B. The company would prepare quarterly sales forecast and carry out production in advance. Carry out production in advance so that the custom orders are fulfilled just in time. That is not the case. That is wrong. In a JIT environment, you don't make the production in advance. Therefore, answer B, okay, option B is the correct answer. It is not an explanation about JIT environment. Therefore, answer B is the correct answer you have to consider. Right, answer B. First question, answer B is the correct one. Okay, we'll see the C and D. The company would rearrange the factory machinery layout in a way that the output one process is directly handed off to the next process. That is streamlining of the processes. That should have been done. Right, that the factory flow arrangement to be done. Right, factory flow arrangement. It is part of JIT environment. The company would introduce a preventative maintenance plan to ensure factory machinery functions perfectly when it is required. That means you will adopt preventative measures than corrective measures. Then it is a kind of JIT environment. That is a kind of application in JIT environment. Therefore, there is also a change which you need to do at the JIT environment. Therefore, correct answer is B. This is the answer you have to select. Right. Okay, we will move to the second answer. Given below events, okay, given below are events involving ABC system, activity-based costing system, identification of cost drivers, identification of cost pools, assignment of overhead cost to cost objects, calculation of overheads allocation rates. Right. Those are the 4 steps. The proper sequence of event in ABC system is proper sequence. First, you have to identify the major activities which generate overhead cost. That is mean you have to identify the cost pools. Therefore, the correct answer should start with number 2, identification of cost pools, right? Then once you have identified the cost pools, the next step, relevant cost pool, you have to identify the relevant cost drivers. As an example, machine running cost is a cost pool. Machine hours should be the cost driver, right? Therefore, first step, identification of cost pool. Next step is identification of cost drivers, right? Third should be calculation of overhead allocation rate. That means the given cost should be divided by the cost driver. Then you will calculate absorption allocation rate. Then assignment of overhead cost to the cost object. That is the last step. Therefore, correct answer should be C. It explains the correct order of the activity-based costing system, right? Correct steps. The answer should be C, right? We will move to the next one. It's relating to the customer profitability analysis. Consider following statements made regarding customer profitability analysis, right? Customer profitability analysis, we will see the relative profitability of each customer. There might be some situations. There are some customers who are more profitable, but some are not profitable as such. As an example, some large corporate might be less profitable because they have the bargaining power and you have to offer bulk discount or higher discount. But if it is small customers, they might ask small discount or sometimes not. Then those small group of customers might be more profitable than large corporate customers. That is important to analyze your customer profitability, right? Fourth statement given, which of the above are true benefits arising from CPA? If you apply CPA, what are the benefits? We'll see what are the benefits. Number 1, provides an understanding of the true cost of each customer and customer group. Yes, definitely. You can identify what are the costs belonging to each customer or customer group. That is one of benefit, right? Helps to identify and separate the most profitable customers and those who are of lifetime value to the company. Definitely, you can identify who are more profitable customer or most profitable customers and who are less profitable customers. It is a great benefit of CPA. Third, helps to understand how dependent the company is on its customers. Then you can realize that, assume if you rely on large proportion of profit share coming from large corporate, then you can realize that you heavily depend on few corporate customers. Or you can see if your total profit come out of the small entities, there are so many customers and they contribute to the majority of profit, then your risk has been spreaded, right? Then you can identify how are you dependent on your customers, right? Third one also correct. 1, 2, 3, correct. Okay, fourth one. Support strategic decision making by providing useful information for customer related decisions, including pricing, discounting, and marketing decision. Definitely. While analyzing, then you will realize whom we need to give incentives, whom we need to give discounts, and what is the price should be charged from each customer. Therefore, all 4 statements are correct, right? All 4 statements are correct. Therefore, answer should be D. Because in customer profitability analysis, those are the benefits that you will receive or that you will expect. You are going to analyze how each customers are profitable and how they consume the resources. How are we going to convert least profitable customers into more profitable customers? That is an objective of this arrangement, right? Hope you have understood. That is the third question, right? Fourth one, look at the fourth one. A coal mining company follows environmental cost accounting techniques. Okay, environmental management accounting practices, right? Which of the following cost would be considered as environmental external failure cost? Can you remember in the quality cost? In the quality cost, we have identified main two types of cost, quality cost of quality conformance and cost of quality non-conformance. There are two, cost of quality conformance and cost of quality non-conformance. When it comes to the cost of quality non-conformance, we have identified external failure cost and internal failure cost. Right. Now, we have given 4 examples. Now you have to identify what is the external failure cost out of these 4 examples, right? Cost of protection of an excavation site against collapsing and flooding, right? It is not an external failure cost. You have higher preventive cost. Okay, prevention. You are going to prevent such event. Therefore, that is cost of quality conformance, not an external failure cost. You have taken necessary step to prevent such occurrence. Therefore, A should not be considered. Cost of waste transportation, storage, and processing to reduce the negative impact to the environment. That means again you will take the preventive action. That is a preventive cost, right? That is a preventive. That is a part of quality cost. Cost of cleaning rivers and lands that are contaminated due to waste disposal. That will be external failure cost. Assume if you have dumped the garbage into the land or river, then definitely you might have asked to clean them. Public might get aware about that. Then reputational damage can be happen. Therefore, it is an external failure cost because you have released the contaminated waste disposal to the lands and rivers. Then bad publicity will be received. It is negatively impact. That is an external failure cost, right? Then part C, this should be the correct answer. We'll look at D as well. Cost of preparing an external environmental protection compliance register, that you are taking a preventive action. Okay. Therefore, it is not an external failure cost. Therefore, external failure cost is answer C. Right, that is 1.4. First 4 MCQs we have just completed. I'm explaining these concepts. We need to do some illustration, then you will understand how are we going to deal with these figures or these illustrations. Okay, 5th one, right? 5th illustration. A manufacturer recently sourced a new material supplier and did a few orders on a trial basis, right? It follows the standard absorption costing system with the following details. Remember, they apply standard absorption costing system, right? The standard material cost is set at rupees 1000 per unit, that is 2 kg per unit at 500 rupee per kilogram for a budgeted production of 900 units. Okay, that is done. Actual material purchase was 1700 kilograms for a total 782,000 to make 750 units. Okay, you have made 750 units, right? You have used 1700 kilograms. Okay, which of the following is the best recommendation on the continuation or discontinuation of the supplier for the next period? Now, there are 4 statements given. Continue with the new supplier as it generates a favorable price variance of 118,000, which is bigger than the adverse usage variance of 92,000 we have to see. Continue with the new supplier as it generates favorable usage variance of 150,000, which is bigger than the adverse variance of 32,000. We'll see. Do not continue with the new supplier as it generates an unfavorable price variance of 150,000, which is bigger than the favorable usage variance of 76,000. 4th one. Do not continue with the new supplier as it generates an adverse usage variance of 100,000, which is bigger than the favorable price variance of 68,000. Now you have to calculate price and usage variance. Then you can easily answer this particular illustration. Okay, I will show you how to do that. Okay, I will take this one. I will take the Excel sheet. Okay, how to calculate? I will take the short formula, how to calculate material price variance, material price variance, how to calculate it, standard price minus actual price into here quantity purchase, because there's no inventory being provided, or they have mentioned that standard costing system they are applying, right? Standard price, if you take the answer, the standard price is how much? Okay. If I take standard price is 500 rupee per kilogram, right? 500 rupee per kilogram. You have purchased, right? Actual price you need not to calculate, because actual price into quantity purchase mean actual cost, right? Standard price 500 rupees. You have purchased 1700 kilograms, right? Then actual price into quantity purchase means actual cost. It is 782,000, right? 82,000. If you take the answer for this one, 500 into 1,700 minus 782,000, you will end up with 68,000 favorable variance. Okay, clear? 68,000. It is a favorable variance. Remember, it is a favorable variance, guys. Favorable variance. Favorable. Then we will look at material usage variance, whether you have efficiently used the material or not. Material usage variance. How to calculate? Now you have manufactured 750 units. You have to find out the standard usage, right? Standard usage of actual production minus actual usage. Okay, I will say AU, actual usage, into standard price. If we work out the illustration, the standard usage, each unit required 2 kilograms. You have manufactured 750 units, right? Then actual usage 1700 kilograms, right? If you work out the standard price, how much is standard price? Is 500. 500. I will work out the answer. 2 into 750 means 1500 kilograms to be used, but you have used 1700. Difference should be multiplied into 500. It is an adverse variance of 100,000. It is an adverse, right? Then what can you say? What can you say? Your adverse variance is greater than favorable variance. Therefore, this offer should not be accepted, right? That means do not continue with the new supplier. The reason is usage variance 100,000, which is greater than favorable variance of 68,000 from material price variance, right? This is 1.5. 1.5. Question 1.5. Right? Question 1.5. This is the answer. Answer should be what? Answer should be D. Answer should be. Answer should be D. Answer should be D. Okay. That's very easy. I'll go back to the paper. You have to select. This is the correct answer. Do not continue with the new supplier, as it generates an adverse usage variance of 100,000, which is bigger than the favorable variance of 68,000. Right. Next one, question number 6. Question number 6. Decentralization of business operations and measurement of divisional performance are common practices that modern organizations adopt, right? In such decentralized organization, the ROI, return on investment, and residual income as performance measures could encourage what? blank decision making rather than promoting blank, which would distract the purpose of this decentralization. That is an disadvantage. Right? Okay, then number one, if you take A, delegated, would we encourage delegated decision making rather than promoting optimization? That is wrong. Not delegated. Fast decision making and optimization. No, it won't be optimization. Sometimes suboptimal decision might have been taken. Right? It won't promote optimized decision. Suboptimal and profitability. As a performer could encourage making rather than promoting profitable decision making. If it is suboptimal, then it is not profitable. D, dysfunctional. Yes, that is the answer. Dysfunctional decision making rather than promoting goal congruence. They will act on their best interest rather than overall goal achievement, overall target achievement of organizational objective. Therefore, dysfunctional decision will be taken, but the decision they have taken may not be the best interest of other division and overall organization as well. Therefore, answer for question number 6 is D. This is the answer. Answer D should be taken. It is a dysfunctional, it will encourage dysfunctional, and it won't promote goal congruence in decision making. Right. Okay, question number 7. Question number 7. Look at this one, will you? A company is in the process of determining its transfer pricing policy for one of its products, which has a high demand in the external market. Remember, if there's a high demand in the external market, the best pricing or transfer pricing technique is market-based transfer pricing, right? Okay. The management has decided the transfer price to be one of full cost plus 30% profit markup or marginal cost plus 100% profit markup, that is MC plus 100, and market price less selling expenses, because if you sell internally, there won't be selling expenses. The current market price is 40% higher than the full cost. Current market price is 40% higher than the full cost. Okay. Marginal cost is 60% of the full cost. Right. Selling expenses are 5% on the product price. Which of the following expression would be possible transfer price is true? Remember, current transfer price higher than 40% higher than the full cost. 40% higher than the full cost. Therefore, full cost plus current market price, full cost plus 40%. That is the current market, full cost plus 40%. That is the current market price. Okay. Marginal cost, 60% on the full cost. 60% on the full cost. Right. Marginal cost is 60% of the full cost. If it is like that, marginal cost is 50% or 60% on the full cost. Right. That means fixed cost will be 40%. Right. Selling expenses 5% of the product price. If you look at this combination, the lowest or the best one, lowest price, you have to the price you need to charge. You have to determine the best minimum price you need to charge from the internal division or transfer price. Definitely market price minus 0.5% on the product price, right? Therefore, it should be the starting point. Therefore, market price, these two as market price minus selling expenses should be greater than what? Full cost plus 30%, no, marginal cost plus 100%. That is the, assume if your market price is 100, right? Then your variable, your cost, full cost is 60, right? Marginal cost is 60% of the full cost. That means it will be 36. Got my point? 36. Then, if it take full cost plus 30, full cost full cost is assume current market price is 40% higher than the full cost. 40% higher than the full cost. If it if full cost is 100, selling price will be 140. Right? That is like that. Full cost is 100, 40%, then it will be 140. Marginal cost is 60% of the full cost. If it is like that, then it will be 60. Right, rupees 60. Selling price 5% mean then 140 into 5%, it will be around 7 rupees. Then if the selling price 140 plus minus, it will be 133. That should be the minimum price. The market price minus SC, that is greater. Full cost plus 30% mean full, then at the moment market price is full cost plus 40%. Right. It is lower than 133 what I have mentioned. Marginal cost plus 100%. Okay, if you want to work it out like this, I will show you a calculation. Okay. Okay. Assume market price, assume full cost as 100, right? Your selling price should be 100 plus additional 40%, that is 40 rupees equal to 104. Variable cost is 60% on the full cost. Therefore, variable cost should be 100 into 60%, it should be 60. Right. Now pricing method. First one, market price minus 5% of market price. If I calculate that one, 140 minus 140 into 5%, answer should be 133. Okay. The second option, full cost plus 30%. Then full cost 100 plus 30%, 30 should be 130. That is done. Third one, marginal cost plus 100% on MC. Marginal cost at the moment 60 plus another 60, price will be 120. If you work out this one, 133 is greater, therefore first one you can say market price minus selling cost is greater than full cost plus 30%. It is greater than marginal cost plus 100%. That should be the answer. Okay, we'll see what is the answer. Your answer should be answer C. This is the correct answer. Answer should be C. Clear? That is 7th one. Right, 8th one. 8. Suppose a company sells 2 products. Product X for 5,000 and product Y for 7,500 at the product mix of 5:2 respectively. Okay. Its monthly fixed costs are 200,000 and the average contribution to sales ratio of the product mix is 25%. The budgeted sales revenue for month is rupees 1 million. This is related to break-even analysis for multiple products. Okay, product mix break-even analysis. What is the margin of safety in terms of sales revenue of product Y? What you have to do first? First, you have to find out break-even sales quantity. Break-even sales quantity. Right. You can easily find out break-even sales quantity, and you have to find out sales ratio, sales mix ratio. We will work out with having this information as it is. Okay. I will take this information as it is and we will work it out. Okay, I will take this information. Right. We will work it out. This is the information I think you can see. Okay, now we will prepare product. There are two products, X and Y. Right. Selling price. I will put SP, selling price. 5,000 for X, 7,500 for Y. This is selling price, right, guys? Then quantity per mix. It is mentioned product mix is 5:2. Quantity per mix. Quantity per mix. When you sell 5 units of X, you will sell 2 units of Y. That is the fixed product combination, product mix. Right. When we are going to find out break-even point or margin of safety in a multiple product environment, you will assume a fixed product mix. Take the revenue per mix. Revenue per mix. You can multiply 5,000 into 5, 25,000, 7,500 into 2. Total revenue per mix, if you work out, it is 40,000. 40,000 revenue per mix. If you calculate revenue ratio, next step you have to calculate revenue ratio. If in a revenue mix, out of 40,000, 25,000 coming from X, that is as a percentage, 62.5. This one as a percentage from revenue per mix, it is 37.5, right? That is revenue mix. Now you have the information, average CS ratio given 25%, right? Then what? Then you have the CS ratio. Then you have to first find out break-even point in rupees. How to find it out? You can calculate fixed cost divided by average CS ratio. Average CS ratio. Your fixed cost is how much? 200,000, right? Average cost for fixed cost 200,000. CS ratio 0.25, right? Therefore, your break-even point revenue is 800,000, right? 800,000 break-even point in rupees. Now your total sales 1 million. Here it says if you have sell 1 million, but it says break-even point 800,000. Margin of safety should be how much? Total budgeted sales minus break-even point. It should be how much? It should be 1 million minus 800,000. Then it is margin of safety 200,000. But that is not the answer you expect. What is the margin of safety value for product? Y. Now this 200,000 belongs to XY both. You have calculated the revenue ratio. This revenue balance margin of safety 200,000 sales available to earn profits. make margin of safety means sales value available to earn profit, right? Therefore, out of this 200,000, how much allocated to X? How do you find it out? 200,000, right? 200,000, their revenue ratio is 62.5%, right? Then if it is Y, how it should be looks like? Y should be 200,000 into 37.5, right? Now you can easily find out the Y value. 200,000, this one multiplied by revenue ratio 37.5, it should be 75,000. This is the answer you expect. This is the answer you need to calculate, 75,000, right? Clear? Therefore, answer should be B. Answer should be B. Answer should be B. 75,000 is the answer. 75,000 is the answer. Clear? Hope you have understood. Question number 9. An investment company is considering 2 divisible capital projects, okay, with unequal lives. Unequal. For the investment, suppose that the company has limited funds to invest. Mutual exclusive project will be. Which of the following is the most appropriate method for ranking these projects for decision making? Net present value. That won't be Y. It will, if you select the, if I take an example like this, okay, I will say if there's project A and assume project B, assume NPV, project A assume 100 million, project B assume 1,000 million. Which project you will select, whether it's the highest NPV project? You can't do that. You have to see the investment, relative investment, right? If the investment amount is different, assume here it is only 400 million, the investment. Assume here your investment is 10,000 million. Then this is not worthwhile. This one is more profitable one, right? That can be, right? Then profitability index, yes, definitely. When you have unequal life, okay, unequal lives of project, the best method is the profitability index. Unequal investment, unequal lives of the project, you can use the profitability index with the unequal lives for capital investment. Otherwise, you can calculate annualized NPV. You can calculate, or you can use the profitability index based on the size of the investment. Most appropriate method for ranking this project for decision making. You can rank the project based on the profitability index. Based on that, you can make the decision. Not ARR, not IRR. Profitability index will be the most suitable method out of the given 4, right? 10, last one. Consider the following project evaluation techniques, right? Economic net present value, economic internal rate of return, not only monetary, social impact, economic impact, or both will be considering economic net present value. Economic internal rate of return, you will calculate what is the rate, IRR rate, which create the both externalities, in positive externalities to the society and as a financial benefit. All will consider. Shadow pricing of economic cost and benefit, social cost and benefit. Which of the above would be appropriate for evaluating large infrastructure project of a country? Economic NPV, economic IRR, shadow pricing of economic cost and benefit, that is externalities evaluation, social cost and benefit. Out of those 4, which one is the suitable one? All 4 are suitable. In a large infrastructure project, like when we are doing the post-completion audit, project appraisal. These four should be considered, because in a large infrastructure project, which is looking at more social infra, like a construction of railway line, right? You have to evaluate all these four aspects, that those four are recommended, all four are recommended. Therefore, answer should be all of 1, 2, 3, and 4. Right, clear? That part we have just completed. Now you have earned 20 marks. Got it, guys? Okay, this one, I will try to quickly within a given time period, we will complete as much as possible, right? Anyway, we have to complete this in full, right? Panorama Arts Private Limited is a specialized wooden art manufacturer. Okay, it's a specialized wooden art manufacturer using its team of expert craftsmen. PAL creates two types of product, mask and sculptures. Right, mask and sculptures are there, two types of product for the export market. Okay. Then in the past, it had no demand for labor hour restrictions. Demand and labor restrictions was not there. The recent economic crisis in Sri Lanka has highly impacted PAL's business, of where it now had a very limited customer base, and at the same time, some of its craftsmen have moved out of the country for foreign job opportunities. It is very common at the moment. The current maximum craftsman time availability is only 3,000 hours per month. That is a bottleneck resource or limited resource. And as production manager had initially decided to allocate 1/3 of the time to make mask and balance for the sculptures. That means 1,000 hours for mask, 2,000 hours for the sculptures. Right. The following table shows the planned manufacturing details for two products. Look at it. 8,000, 30,000 is the selling price, material cost per unit, skill labor hours required per unit, current maximum monthly demand already given. Skill labor is paid 500 rupees per hour. The variable overhead cost per unit is 1,000 rupees per mask and 9,000 per sculpture. Okay. Total monthly fixed production overhead cost is 500,000. Okay. Right. PAL's management recently learned about deciding the profit maximizing product mix based on throughput accounting principles, and it is interested in applying this method with immediate effect. Okay, in a throughput accounting, remember the only variable cost is material cost, right? Even though labor is variable, it should be considered as fixed. Except material, all other costs should be considered as fixed, and they are known as total factory cost, right? Okay, what they have to do, compute the throughput maximizing monthly product mix and the maximum profit at this level. I think you have the paper. I can go to the abacus and show you the answer, but we will quickly work out the illustration. Right, I will move to the Excel and I will show you how to work it out. Right, there are two products, mask and sculptures. Those are the two products, right? Selling price, I will take the selling price. Mask selling price is 8,000, sculptures it is 30,000. Right, okay. We will quickly do. You also do the illustration, then you can practice, right? Then less the only variable cost, direct material cost. Direct material cost is given 2,500 and minus 8,000, right? Then you can calculate what? Throughput contribution per unit. Throughput contribution per unit, right? 8,000 minus, 8,000 minus. So on 5,500, this should be 22,000, right? Then this is the contribution per unit, but you can't make the decision based on that. You have to calculate How now labor is limited in supply. 3,000 hours are there. Then how many labor hours to be used per unit? It's there. But take the bottleneck hours. We call bottleneck hours per unit. Bottleneck hours per unit. If you read the illustration, mask required 5 hours. 5 hours. Sculptures required 16 hours. Then calculate throughput contribution per hour. Throughput contribution per hour. Kapagada contribution here. Right. Throughput contribution per hour. 5,500 divided by 5 hours, it is 1,100. And 22,000 divided by 16 hours, it is 1,375. Now you have the ranking. First rank goes to here. If time available, balance should be allocated. Right. That is done. Clear, guys. Okay. Now we will prepare the production plan. Now you have arranged the product ranking. Then you can do production plan. Production plan. Okay, maximum bottleneck hours available. Maximum bottleneck hours available. Maximum bottleneck hours available. I'll take 3,000 hours, right? 3,000 hours. 3,000 hours, it is available. Maximum 3,000. Okay, first production goes to sculptures. Therefore, first production. First production sculptures. Their maximum demand 150 units, right? 150 units, each require 16 hours. Then how much is it? That means 2,400 hours to be used. Balance 600 hours. That 600 hours, if you look at about mask, the total requirement, you can see they want how many units is the demand? 300 units in demand. 5 hours into 300, 1,500 hours required, but not available. Therefore, balance should be allocated. Balance 600 hours. It should be allocated to whom? Mask. Out of 600, each required 5 hours. If you calculate, it should be 120 units. Right. Now, entire hours you have utilized. Right. That is how you need to work out. Production plan prepared. Now they asked to prepare the profitability statement. We'll do. You can do it. Profitability statement. Profitability statement. I can show you the answer, but it is better if you work out. You need to practice to the speed, because if you have done this one, you can do easily. Revenue. There are two products. Mass. How much is it? Mass 120 units, each at 8,000. 120 units, each at 8,000. Right. Then sculptures. 150 units, each required 30,000 the price. Then 150 into 30,000. This is the total revenue figure. Total revenue I will take the total revenue 960 plus 4.4, that is 5.46 is the total revenue, right? Then deduct material, direct material, direct material. That is the only variable cost, remember, right? Direct material. Now mass 120 unit you have manufactured, material cost per unit is 2,500. 2,500. Sculptures 150,000 unit, material cost is how much? It is 8,000, right? It is 8. Right, we will work out the value 120 into 20,500 and 150 into 8,000. Right, that is the total direct material cost. If you take the value, mask and sculpture, 1.5 million is the direct material cost. Then you can get the value here. I'll take the value. Throughput contribution. Throughput contribution, you can take the value. 3,960,000, right? Labor. Labor cost, other cost, all other costs we call total factory cost. Total factory cost including labor, right? Direct labor. Remember, total your direct labor capacity only 3,000 hours are available, each at 500. It should be considered as into 500. It should be considered as a fixed cost, right? It should be considered as fixed cost, 1.5 million. Variable overhead, right? Variable overhead is how much? Generally, variable overhead vary with the output, right? Then you can calculate what is how many variable cost you, what is the value of variable cost you need to recognize variable overhead. If you calculate variable overhead, how it, if you go to the illustration and see variable overhead 1,000 per mask and 9,000 per sculpture, right? Variable overhead. Mask. Remember, we have at the moment we have allocated 1,000 hours. Each will use 5 hours, right? Rate is 1,000, right? Therefore, if you calculate this one, the value should be 2 million, right? Is it 2 million or 200,000? It should be 200,000. Sorry, it should be 200,000. 200,000 mask, because 1,000 rupee per unit, that means each unit requires 5 hours. At the moment, how you have allocated the production, if you go and see, I will show you 5 hours required per unit, because variable overhead vary with labor hours, right? Therefore, 1,000 rupee per mask mean per hour it should be 200 rupees. Therefore, at the moment, at the present situation, what is the allocation? 1/3, 1,000 hours for mask, 2,000 hours allocated to sculptures, right? Therefore, now we will calculate how much it would be sculptures. Sculptures, you have allocated 2,000 hours. How many units you have manufactured? Divide by 16, multiplied by each unit, you have variable overhead of 9,000, right? If you calculate this one, 2000 divided by 60 multiplied by 9,000, because you need to find out the current production. It is 1,125,000, right? Then, in addition, there's a fixed production overhead. Fixed production overhead, 500,000. Altogether, you will consider as total factory cost. Total factory cost. All cost to be considered, 3,325,000. Now here you can take net profit. Net profit, if you deduct this amount, your net profit should be 635,000. That is how we will deal with what? Throughput accounting. That is the first part of the answer. We have prepared the product mix and production plan. Thereafter, we have prepared the profit statement. Okay, we'll go back to the illustration and see the balance part. Suppose that the procurement manager has received a proposal from a vendor where the masks are pre-processed before they are carved by the internal craftsman. This pre-processing is expected to reduce the skill labor hour requirement per mask by 40%. You can reduce the mask processing time by 40%. That means currently 5 hours you are taking, then it will be 40% reduction, mean 2 hours will be reduced. That means 3 hours. Assess whether this project should be accepted or rejected. Right. How can you assess? Now, currently, if you have determined the production plan, if remaining available, you can allocate them to where? You can allocate them to the sculptures, right? Then we will see how it will looks like. Right, we will do that one. And remember, if it is not 5 hours, if it is 3 hours, you have to see what will happen to the throughput contribution as well. Okay, I will show you. Now, same computation you can take. Now look at this one. Instead of 5 hours, if it become 3 hours, because currently 5 hours, 40% saving. 40% saving mean 2 hours will be reduced. That means actual hours will be 3 hours. If it become 3 hours instead of 5, if it is 3 hours, what is the throughput accounting ratio? Throughput accounting ratio will be contribution per hour will be 1,833. Then ranking will change. 1, this is 2. Ranking will change. Now, first production, not the sculptures. Now it become what? Now it become mask, right? Mask, maximum demand, how much? Maximum demand 300 units. 300 units. Now 3 hours per unit required. Then it should be 3 into 300, 900. 2,100 hours will be available. Now balance should be allocated to sculptures. Sculptures. Sculptures, how much? 1,500 divided by 16. 1,500, sorry. Not 1,500, 2,100. Sorry. 2,100 hours. If you calculate 2,100 divided by 16, it is 131 units. Right. Now you have to calculate revenue And this is mask. Now you will sell how many units, Lamai? Not 120. This will be 300. 300. 300. Right. Sculptures, you will sell 131 sculptures each at 30,000. Not 150. It is 131. Now 6,330,000 will be your revenue. Direct material cost, not 120, this should be 300 into 2,500. 300, 2,500. Sculptures, 131,000 into 8,000. 131,000 into 8,000. But remember, this total factory cost will remain unchanged. Then your total net profit will go up from 635 to 1,207,000. Right? It will change like that. That is the correct answer. I will show you the answer in the answer script also. That is the answer. If you go back and see, you can see this is how it is calculated. Then this is how 1,207. Earlier 635. Now it went to 1,207,000. Difference is 572,000. Profit will go up. Right. Then you have to say this proposal should be accepted. The proposal should be accepted. Right, guys. That is question number 1. We have done it. Right. Question number 1, we have done it. Now we will see question number 3. This is relating to variance analysis. Right. Variance analysis. Read. Century Manufacturers Limited CML follows the absorption costing system for the single product it makes. The standard selling price of the standard profit are set at 5,000 per unit and rupees 800 per unit respectively for the budgeted production and sales of 10,000 units. If it is absorption costing apply, your standard, when you are going to calculate sales volume profit or sales volume contribution margin, profit variance, sales volume variance, absorption costing you will take standard profit, but marginal costing you will use standard contribution. Absorption costing you will calculate fixed production overhead, expense variance and volume variance, but in the marginal costing only calculate expense variance. Those are the changes between absorption and marginal. You should be aware of it, right? CML performs a monthly variance analysis by comparing the actual result with the budgeted results. The following variances were computed for the month just ended. They have computed the variances. You can see. CML is planning to introduce a reward system to improve performance. It announced that the rewarding will take place based on CML's total profitability rather than individual achievements. It will be considered the overall profitability increase. The 3 heads responsible for separate operation, the procurement manager, the factory operation manager, and the sales manager, they are responsible for their field, are quite unhappy about the fact that total profitability is considered as the decision factor for the reward system on the basis that total profitability is not under an individual's control. Because as an example, procurement manager's decision, it's his decision, but it is beyond sales manager's control and factory operation manager's control. Therefore, if they have taken different decision, ultimately they also held liable, not liable, their profitability also get affected because they are not act on their own interest or divisional interest, because they are beyond the control of each divisional manager, right? Prepare the operating statement for the month just ended in order to ascertain the actual profit earned. Now you can calculate the budgeted profit. Then we have to prepare the variance reconciliation statement. Okay, Profit variance reconciliation statement we will prepare quickly. With this information, I will take this one, I will take a snip. I will copy this one and we will prepare a profit variance reconciliation statement. Guys, I'm a little bit faster because I need to complete this paper within today. Right, these variances are there. We'll see. First, we are going to prepare a profit variance reconciliation statement. Profit variance reconciliation statement. First, we will calculate budgeted profit. Budgeted profit. You budgeted to manufacture and sell 10,000 units, right? 10,000 units. Budgeted profit per unit is 800 is given. If I calculate 10,000 into 800, this would be the value. 8 million. 8 million is the value. Right. Now, when you're going to calculate, prepare a variance reconciliation statement, remember, if you take material price and usage variance, you're going to include in the reconciliation statement, you can't put total material cost variance because material price and usage variance represent the total cost variance, right? Assume if you analyze usage variance into capacity utilization and volume efficiency, if you include those subvariances, you can't include material usage into, you can mix and yield. If you include mix and yield, you can't show usage variance. That is the point. Right. If now we are going to calculate actual profit. When you're going to achieve actual profit, if there is a favorable variance mean actual result is greater than budgeted. If there's a favorable variance, you have to add. If there's an adverse variance, mean your actual result is lower than budgeted result. Therefore, I will say I will add favorable variances and I will deduct adverse variances. Right. It is very easy. Okay, material price. It's a favorable variance of 500,000. Right. Then material usage variance, it is an adverse variance of 150,000. Then labor efficiency, it is 250,000 favorable, right? Then labor rate, it is 300,000 adverse. Labor idle time, anyway, it is an adverse variance, no? Labor adverse. Labor idle time variance 100,000. Fixed overhead expenditure. Variance 750,000 favorable. 75,000 favorable. Then variable overhead efficiency. Variance 90,000 adverse. And sales price variance. 300,000 adverse. Those are the only available variances. Now you have to take total available favorable variances and negative variance. Net effect. Adverse variances are greater than favorable variances. Therefore, if you take these two, adverse variance net effect is 150,000 lower, then you can easily calculate actual profit. Actual profit. Actual profit 115,000 lower than budgeted profit. This is the, see how easy this is. I think we have discussed in the classroom also, we have discussed similar kind of philosophy so many times. This is nothing. You can easily earn 5, right? There's no worry. You can easily, this is the profitability statement or profit variance reconciliation statement or profit variance reconciliation statement. That is done. Okay, guys, now we will move to the next illustration, next part of the illustration. It asks, justify CML decision to consider total profitability for reward system. Right, in the suggested solution, it look at only one angle. Now it clearly says that profitability of the company will be considered when deciding the reward, overall company profitability. Now I will take that's a good option. One side that is for in favor. I will explain in favor. If the organizational objective is to maximize overall company profitability. Therefore, if each individual managers act on their best interest, as an example, procurement manager, he wanted to report higher favorable price variance. What he can do? He can purchase cheap material and show higher or too cheap, low quality material, and he will show favorable price variance. Now he is happy. He can cheat. But when those material will be transferred to the factory operation manager, he has to manufacture. Then there will be adverse usage, and thereafter efficiency can be adverse, right? It can be affected badly, right? Then that factory operation manager will, that is beyond his control due to the cheating of procurement manager, factory operation manager got stuck. Based on the available material, factory operation manager also manufacture some good with the defect. When it's going to sell, sales manager can't sell. He can't achieve the target. Therefore, ultimately, final objective of the organization won't be achieved. That is one. In against this opinion, you can, it is not required to do, but in the against, if you look at about the material price variance, it is beyond the control of operation manager. He is only responsible which are within his control, right? Then they will motivate to improve their performance. That's one aspect you can see. Therefore, ultimately, each one act on the best interest, and they will try to do a best out of their division. Then automatically it can help to, it can lead to overall profit maximization as well. But the main thing, but that cheating can be happen, right? Goal congruence not been achieved. Suboptimal decision can be made. Therefore, better if you give it the rewards based on overall profitability. Okay, you can see the comments. See the comments. Any organization objective to maximize the overall profitability, right? When reward system is based on individual unit performance, one unit can follow cheap practices such as purchasing low quality items for favorable price variance. That can be happen. However, this practice could generate negative variance in production and labor efficiency. Similarly, this could happen in any department or unit. That can be happen. That is the main benefit of overall rewarding system. It won't individualize, right? Question number 4, not a big one, very easy type illustration. We'll read. On-Call Plumbing and Air Private Limited, OPAL, provides door-to-door technical services. OPAL kila matak kedi vena vena matak wenna puluwan. Right, anyway. Door-to-door technical services in relation to plumbing and air conditioning needs. Right. There's a question. Can you the answer show again? Okay, I can show the answer again. If you haven't written it down, I can show it to you. The answers already we have shared in the chat, right? In the chat already there, you can look at the answer booklet. Also, you can take it, right? Otherwise, you can take a screenshot. Oh, fine. 3B, right? 3B for 1 second. It's there in the answer booklet, Lamai. No need to worry. Yeah, right. Okay, we will move to question number 4. Opel, right? Opel has 20 trained technicians working full time in its operation. Remember, 20 technicians. Okay, 20 technicians. Opel undertakes jobs by telephone for either emergency or pre-arranged visits. The company charges a minimum call-out fee of covers first 15 minutes of each visit plus the traveling time. Beyond 15 minutes, they charge the minimum blocks of 30 minutes. Okay. Any material that might be necessary to carry out the relevant work will be charged separately. Okay. The technicians usually work 8 hours a day, 6 days a week. However, during a regular working day, they are permitted to take 2 tea breaks of 15 minutes and further half an hour break for the lunch. Altogether, 1 hour will be should be allocated. It is to be taken out. It is not a productive hours, 10 hours, 1 hour per day. Technicians' working time further reduced an average of 10% due to time off and illness. Okay. In the week that just ended, 650 service hours were actually built. They have built 650 hours. Compute the following capacity levels for the Opel for the period of 1 week. Design capacity in service hours. Mukhattami, what is the meaning of this design capacity? The design capacity is the theoretical capacity with considering ideal working condition. Ideal working condition means 100% efficiency level. How many hours to be worked and how many hours you have budgeted, right? Design capacity. Okay, we will calculate design capacity. Out of that, you have to work out what is the effective capacity we will do, right? Okay, first we will work out design capacity. I will go back and I will show you how to calculate design capacity. Okay, answer booklet. Give me a second. Someone can drop the answer booklet to the chat. Someone is needed. Okay. The first one, they asked to calculate what? Design capacity. What is the design? Now you will work 8 hours a day. 8 hours a day. Right. Out of that, 1 hour will be avoided. That is for breaks time. Right. Number of working hours, working or service hours per day. 8 minus 1. So 8 minus 1 means 7 hours. 7. Why? I'm telling that because 8 hours a day, but half an hour lunch break, 15 minutes, 2 tea breaks will be there. Therefore, 1 hour, 7 hours. Then number of working days per week. Number of working days per week. Per week, you will work 6 days. Right. If one person worked, what is the duration? What is the service hours per day, per week? Service hours per person per week. It is 7 hours into 6. How many technicians? Number of technicians. 20. If 20 technicians are there, one technician will work 42 hours. Therefore, you can calculate design capacity. Design capacity without considering any idle time and weaknesses. Design capacity is 840. 840 hours is the design capacity. That's done. Part 1 of the illustration, design capacity 840. Design capacity with theoretical capacity. And then ask about effective capacity. Remember, out of the design capacity, you can take the design number 2. Now design capacity 840. Design capacity 840. Right. Now effective capacity mean out of 840, right? There might be like sick leaves, even a production operation. Total design capacity may not be the same as effective capacity. If it can be lower than that, sometimes machine breakdown, employee strikes, then effective capacity might be lower than that. That is considered in the normal situation. Then here you have to deduct less reduction due to illness or time off. It will be 10% lower this one. 840 into 10%. 84 hours. Effectively, the time available out of this one, 840 minus 84, 750 is the effective capacity. It's like this. Assume you have planned to work, do your studies 12 hours a day, 12 hours straightforward, but effectively you can't do it. No? Then you have to see what is the effective capacity. You will take time breaks. After removing those time breaks, what is the effective capacity? Because in a design capacity, you don't consider about normal time waste, normal disruption to operations will not be considered. Design capacity. Those are the, now you have calculated design capacity and effective capacity both. Right. Okay, we'll see the next one. Assess the capacity utilization and efficiency attained for the week under review. Capacity utilization. In the given consideration, capacity utilization, you have the capacity 840, 650 hours for the build hours. Right, okay. Now we will calculate, first one, capacity utilization. Capacity utilization. Capacity utilization. When you're going to calculate capacity utilization, guys, okay, you have to take actual hours divided by, okay, you have to divide it by design capacity. Design capacity. Design capacity. Okay. Into 100. Okay. Capacity utilization. Here, actual capacity is 650. Design capacity 840. As a percentage, if I take it, it is 77% capacity utilization. The efficiency, if you're going to calculate the efficiency, this Normal time off you have to consider as it is inherent, right? Efficiency, if you calculate the efficiency, you have to divide actual hours, same formula will take, it should be divided by the, not design capacity, it should be divided by the effective capacity. Effective capacity. Actual hours built 650. 756 is the effective capacity. As a percent, it is 86%. You have calculated the capacity utilization and you have calculated capacity efficiency. Efficiency capacity utilization, right? That is done. We'll go back and see what you need to do, right? The management of the OPAL expect an increase in demand for their services in next month due to festival holidays. That is a seasonal demand. However, this demand will not persist and will come back to the current levels thereafter. Capacity will go up and come down, right? Now you are a service organizer, you are giving a kind of call service, right? Call center. Here it's mentioned about on-call plumbing. Therefore, you are a kind of a call center. Now this particular festival season, right? The next season, demand will go up, right? Then, but it is not persist for a long period. Assume like a New Year season, the same. April's demand will go to a peak, again come to the normal level. Like assume this is January, month of January for the construction work, plumbing and construction. January it will go up. February no construction work. They generally want to start, then again come down to the normal level and go. Right. Therefore, it is a temporary one. Then how are you going to increase the capacity? In normal hours, they will work 8 hours. Out of that 1 hour, you can take away. 7 hours, they will work per day. What you can do? This is a short and temporary situation. Now you have the efficiency ratio close to 86%. That is a good ratio. In order to increase the number of hours, you can pay them overtime hours. No need to recruit new people for a short period, right? You can give some incentives, you can pay some overtime hours. We will see the answer. What is their answer? Look at this one. Allowing exchange technician to work overtime. You can tell them to work overtime. Temporarily hiring additional technicians. You can temporarily, not permanent cadre. Reallocating technician from other division if available on temporary basis. Having multi-skill technician in other divisions so that they can be utilized when needed. Those are some possible strategies when you have a capacity shortage available, what you can do. Clear? Those are the things that you can do in not, because this is not a long-term capacity requirement, capacity increase. It is a short term. Then in a short period, you can take temporary precautions you can take or activities you can perform, guys. Because remember, if you practice this illustration and go to the exam, it will be much easier to sit the exam. Otherwise, it is difficult. You have to practice more and more illustration. It will be helpful, right? You have to understand the concept and then work out. Without knowing the concept, without knowing the content of your syllabus, and if you attend to the exam, definitely you may not be success, right? This is not a selective learning. You have to understand each and every concept. This is not a big issue. This lesson, this particular illustration related to the capacity planning. When demand exceed capacity, what you have to do? Now here demand exceed the capacity, and that's such, but it is temporary, short term. Then these are the short term strategies you need to follow. Clear? Okay. We'll move to the next illustration. Question number 5. This is relating to, guys, this is relating to factoring, working capital management 10%. Anyway, each and every exam, 10 marks will be allocated to working capital management. It's a mandatory question. Remember, mandatory. This will include introduction to working capital management, cash management, receivable management, inventory management, payable management. All aspects will be available, but you have to learn. Here it is receivable management, part of the receivable management. We'll read. Wagner Private Limited is an import trading company. With the increase in interest rate in the market, WPL is evaluating whether to improve its working capital management. The company currently makes cash sales 300 million a year, and this amount 30% of the total sales. 30% is 300, then 100% should be 1 billion. Out of 1 billion, 300 million is cash. Balance 700 million should be then credit, right? Sales are distributed evenly throughout the year, okay. The balance is made on credit and all credit customers are required to settle within 30 days. Credit period is, they have given 30 days credit period, okay, we'll see. On average, customers have taken 60 days to settle, while approximately 3% of credit sales become bad and unrecoverable, okay. WPL has funded working capital by an OD facility with an interest rate of 29% per annum, and the interest on overdraft is payable monthly. That means you have to calculate EIR, effective interest rate, because you are servicing interest monthly, not annual interest servicing. Monthly, you have to pay the interest. Then you have to calculate EIR. Hope you have done it. It should have been done. You have performed those calculations. WPL has been approached by a factoring company, Colombo Finance Limited, CFL. CFL is of the opinion that it could use its expertise to reduce average trade receivable days to 45 days, while cutting the bad debts by 30%. WPL can also expect a reduction of administrative cost by 3 million per year. Administration cost also will be reduced by 3 million. CFL will agree to advance 75% of the top value of invoice right after the invoice date, and interest rate of 30% per year, payable every month, and you have to calculate EIR as well. CFL would charge an annual administrative fee of 1.5% of credit sales. Okay. You are the management accountant of WPL and have been asked to evaluate the CFL's offer. You may assume there are 360 days per year, right? Required. Assess whether CFL's offer financially acceptable to WPL. But I can show you the answer, but it is worthwhile to calculate it and see. Right, guys, this is a working capital management question. I'll go to the Excel sheet and I will do the working. Right. Now, based on the given consideration, total sales, sorry, cash sales, 30% is 300 million. 300 million. Then total sales would be how much? Total sales would be, if 300 million is 30%, 0.3, what would be the 100% then? It should be 1,000 million. 1,000 million. Cash sales 300 million mean credit sales. How much? 700 million. That you need to summarize, right? Now, credit sales, you know that it is 700 million. Okay. Now, based on the present condition, what is the debtor balance and related finance cost? Debtor balance and related finance. Okay, we will see this one. Current arrangement. Current arrangement. If you collect your own, what would be the value, right? Because similar kind of illustration was there in the study pack as well, right? We'll see the current arrangement. When you're going to calculate current arrangement, you have to see current debtor balance. Current debtor balance. Now, credit sales 700 million, you have been given 30 days credit period, but customers have taken 60 days credit period. Okay, first we will calculate debtor balance. Debtors. I will take in rupees 1,000. That means this 700,000. This is for 360. Customers will take 60 days to settle. This is their debtor balance. Actually, it is in rupees million, it is 116 million debtor balance. Now, interest is 29, that is the annual interest rate. You have to calculate EIR. EIR. How to calculate EIR, guys? How to calculate EIR? 1 plus R divided by N power N, right? Minus 1. Minus 1, right? If we calculate the EIR of this solution, right? Monthly you are servicing the interest, no? Therefore, 1 plus your interest rate is 29%. 29% divided by 12 power 12 minus 1. You can take, sorry. Right. Minus 1. 33.18. That is the EIR, effective interest rate. Because if you compute more than 1 times per annum interest income impute, then effective interest rate is greater than your nominal interest rate. Clear my point? If you compute more than 1 times per annum, that is if it's semi-annual, quarterly, monthly, your effective interest rate will go up, right? Now the effective interest rate is 33.18, even though it is 29, right? Effective interest rate will be 33.18. That is the bank overdraft rate. Therefore, interest cost on debtors, interest cost on debtors. How much? This amount into 33.18. 38,713.9. These are in rupees 1,000. That is interest cost on debtors. In addition, it says that if the current arrangement practices, there will be bad debts of 3% on credit sale. Bad debts. 3% on credit sales. Credit sales are 700 million. Into 3%, it should be 21,000. That is 21,000 means 21 million. 21 million bad debts. Then what else? If you follow the current practice, it says that WPL can also expect a reduction of administrative cost by 3 million. That means if you transfer this operation, current administrative cost will be reduced by 3 million. That means currently you have an administrative cost. Cost of 3 million, that is 3,000. right? These are the cost. If you collect based on the current arrangement without factoring, this is the cost you have to incur. 62,713.9. That is the cost of current arrangement. Now, if you factor, how factoring arrangement looks like? Factoring arrangement looks like there are three parties. It's tripartite. This company WPL, that is your company, then debtors, and CFL, that is factoring company, right? WPL sell debtors to CFL, right? They will sell debtors to CFL. Then CFL give an advance of 75%, right? They will give an advance. Debtors 100% will be settled to CFL. CFL balance 25% transfer to WPL after the period 45 days after deducting their charges. That is the arrangement. That is called factoring arrangement. Now we will see the new arrangement, factoring arrangement. Factoring arrangement. Now we will see how if we apply factoring arrangement. Remember, total credit sales, 700 million. Right. Figure sign ₹1,000. I will take figure sign ₹1,000. Right, 700 million. Credit sales 700 million. Remember, factoring company provides 75% advance. Right, 75% advance they will provide. Okay, each 45 days they will provide 75% advance. Remember, they will charge the interest. Balance 25% they have to finance, because if you sell 100 rupee, you won't get entire 100 rupee as an advance. Factoring in from the factor. Factor you give 75. Balance 25% we have to finance our own, right? It will be collected later. Oh, you have to finance your own. Okay, now out of 700 million, now they will provide the advance at an interest of 34%. First, we have to calculate effective interest rate. Effective interest rate on factoring. Effective interest rate on factoring. How to calculate effective interest rate on factoring? We have calculated earlier. 1 plus 134% divided by 12 power 12 minus 1. If you take the percentage, second, right, minus, it is 39.8. That is the effective interest rate. Now, interest on factoring advance. Interest on factoring advance. How to work out it? You have 700 million, right? That is equal 700,000. Out of that, 75% advance will be provided. You can't take 700 million to 75%, then you can't multiply it by 39.8. Remember, this is the annual credit sales, annual. Out of that, you will collect these debtors out of 45 days, out of 365 and 45, right? Then you need to charge from 39.8% as interest. This is how you will work out the interest cost. Interest on factoring charges will be This 700 million into 39, sorry, out of this 75% into 45 divided by 360 into 39.8. 26.139 million, right? 26,000 interest on factoring and then find out interest on OD, overdraft. Balance 25% you have to finance your own. Then 700 million, I will take 700,000. Balance 25%, you have to finance your own. Right, you have to finance your own. Right, therefore, now they will settle within 45 days to 365 into effective interest rate 33.18. Right, 33.18, that is the bank OD interest rate. Okay, we will work out 700,000 into 25%, right? Into 45 divided by 360 into 33.18, 7,258. Now remember, bad debt. Here you have incurred a bad debt, 21 million. And it said that, I think you have the paper, right? It said that if you go back and see, it has said that cutting the bad debt by 30%. Bad debt will reduce by 30%. Okay, therefore, bad debt would be bad debt, not 21 million. It will be 30% reduction. That means it will be 70%. 14.7 million bad debt, 30% reduction. In addition, they expect, okay, CFL would charge an annual administrative fee of 1.5% on the credit sales. They will charge 1.5% on the credit sales. Administrative charge. Administrative charge. $700 million into 3%. Sorry, not 3, it is 1.5, 1.5%. 10.5. Now you can say, other than that, no any other cost you have to incur. If you take the total, this is the cost of factory. Now you need to compare these two options. If you collect your own 62.7313 million, if you factor, okay, factoring arrangement, it is 58.598. Therefore, factoring arrangement will be recommended. Factoring arrangement will be recommended. The net benefit, net benefit, you can compare the benefit in rupees 1,000, 62.7 minus 58.5, 4 million benefit is there. Benefit. Right, that is the answer. That is the answer. Right, I'm little bit faster because within 3 hours we have to complete, but I won't take 3 hours. I will quickly explain. State 3 disadvantages of WPL of the factoring arrangement. Remember, factoring arrangement has a higher cost than your banking arrangement, bank overdraft. Number 2, customers might get upset because you don't have any relationship. Customer have to pay to another third party. They may be reluctant to pay, right? There will be customers will distract, right? Other thing, your company customer base will be taken by someone else. Then it is badly affected to the company's operation. Okay, I will show you the answer. Look at this one. Since debtor settlement are directly received by the factoring company, it is difficult to set off the dues invoices from the accounting system. Difficulties in getting information from the payment made by the customers. Sometimes customers won't provide because they have settled by some other company. It is difficult to get in the information. Customer may have difficulties in making the payment to the third party. The factoring company deals directly with WPS customers, and this may affect what your customers think of you. Right. That means assume if they badly manage your client or customers, then customers will be disappointed on your arrangement. Right. And sometimes they say that if we are facing liquidity crisis, they will see we are in a difficult situation. They can come up and negotiate with their pricing as well, because if they have a bargaining power. Right. That is question number 5. Right. Now we are moving to the section. Question number 6. This particular section, question number 6, 20 marks will be allocated. Right. Now we are going to discuss. Okay, we'll read the illustration first, guys. This is not a big difficult question. Not a difficult question at all. Sorry, 5th question haven't been discussed. This one we have discussed, guys. Wagner Private Limited, this one we have discussed now. Already discussed. Question 5 we have discussed. That is working capital management question we have discussed. Question number 6. Rochelle Enterprises Private Limited, REL, is a diversified conglomerate. As a business expansion, REL is now considering new consumer goods buying and selling business where the sales items will be directly imported and distributed island-wide. Hence, this requires REL to have a central warehouse to store these inventory items. The company has already obtained warehouse space at monthly rent of 200,000. Now they have already taken 200 warehouse at a monthly rent of 200,000. The logistic management function is new operation area. Fifth question, suggest answer have answers differ from our answer. Suggested solution, okay, their answer is how much? Guys, these are in rupees million, right? My answer, I have taken it in rupees 1,000. Right? If you see, this is the correct answer. If you taken out into millions, you have to divide this into 1,000. Okay, if I divide this by 1,000, the answer should be 411. Right? This is in rupees 1,000. This is in rupees million, guys. Right? There's no different. There are different ways to calculate it. This session, definitely Institute will upload this session immediately. Right? Institute will upload this session. Right? Okay. I'll move to this one. Now, first we will look at the requirement. Assess the above two options using the relevant cost principle for short-term decision outsourced during the first year. When you're going to make such decision, it's a short-term decision making. Always look at cash flow. It should be a cash flow item. It should be a future cost, and it should be incremental. Those 3 key components are there when it is a short-term decision. Incremental cost, it is a future, it should be future cost, and it should be cash flow. Right? While considering that, you have to make the decision. Reasons for considering or not considering the cost element in the assessment should be specified in your answer. Right? Okay, we'll start with that mind. Okay, first one, while reading the first para, now they are going to start new business operation, but they have already taken 200,000, paying 200,000 monthly rent warehouse rent. You have to pay 200,000 a month. You have already obtained it. Now you are going to evaluate this function should be conducted by yourself or outsource. When you are going to make such decision, the rent already you have committed is not relevant for that decision because it is already being committed. Remember, it is a sunk cost and not an incremental cost. If you decide, now you haven't decided in this moment, obtain a warehouse space already. Now you are going to decide whether warehouse function or logistic function should be outsourced or managed internally. Then when you are going to make such decision, this 200,000 is irrelevant, not relevant. Right, okay. The logistic management function is new operational area for the company. REL is considering whether to internally source or outsource this logistic management function. For the following information is available for these two options. Right. REL can deploy the internal team to handle their logistic operation. This team is presently paid 500,000 a month and is currently allocated to another business segment to earn monthly contribution of 200,000. Therefore, monthly salary 500,000. After deducting that, you can get 200,000 contribution. Salary payment is the only direct cost involved in generating this contribution. Okay. The monthly overhead allocation of this team is 120,000. However, the potential repositioning into the logistic function can reduce the total overhead cost to 100,000. That means if you outsource it, the overhead cost can be avoided by how much? 20,000. Right. Cost, there can be cost saving. Or otherwise, if you if you decide your own, you could have been reduced the cost to 120 to 100,000. But if this team conduct this function, there will be an additional cost of 20,000. Look at this one. Yes, additional cost of 20,000. This team is 100. However, the potential repositioning into the logistic function, total overhead cost to 100,000. Right. Okay, now we have to analyze each function. Okay, we have to analyze whether this is relevant or not. Remember, first 200 monthly rent is irrelevant, it is a sunk cost. Now you have to allocate 500,000 the salary, so after deducting that 200,000 the contribution. That means monthly revenue will be 700,000. If you decided to conduct this function your own, you will lose 700,000 a month. Per annum, it will be 8.4 million you will lose from other function. But if you have outsourced, you can earn that 8.4 million revenue without any disturbance, right? There is a inflow, there is a saving. If you outsource this function, these employees can generate 8.4 million revenue. Okay. There is a saving, right? Then the monthly overhead allocation to this team is 120,000. However, the potential repositioning into the logistics. Now, if you are going to outsource, your overhead cost will be still 120,000. But if you have outsourced this one, you could have been saved 20,000. Now you can't save it. You have to incur 120,000, then 20,000 more. If it is per annum, it should be 240,000. You have to pay more. A well-known logistic management firm has submitted a proposal to undertake this operation at RES premises for monthly consideration of 800,000. If it is 800,000, it is an incremental cost. Per annum, 800,000 into 12, 9.6 million you have to pay. That is an incremental cost. It is relevant. right? REL, okay. In addition to this monthly fee, it has request for an office premises REL headquarters. REL currently renovated the headquarters, spending 150,000 for another purpose, which has not materialized. Again, then you have already spent, but you can't use these premises any other purpose. This the invoice for the renovation work is still payable, whether you pay or not. It has already incurred, even though you have a payable. The expected reapportionment of the fixed cost this space is 40,000 a month. It is not an incremental cost. Reapportionment of overhead cost is not relevant. It is not an incremental cost. A month, and recovery of depreciation for the allocated fixed asset will be 100,000 per year. It is not a cash, non-cash item. It is not relevant. Not relevant. Then the logistic firm needs access to RES ERP system. This may need one-time investment of 200,000 for granting access. Sometimes it require a license. It is an incremental cost. Yes, it is relevant. 200,000 is relevant. It is an outflow cost. Average monthly sales will be 20 million. The industry norm is to have a 3% unavoidable inventory loss on the sales value in the logistic process. However, the logistic firm that has submitted the proposal is famous for good inventory management and would generate maximum inventory loss of 2%. Right, 1% saving will be there. 20 million into 1%, it will be 200,000. Per annum, you can save 2.4 million inventory loss. Right. Now you have to, it is a relevant, it is a cost saving. Now you have to look at the net benefit. Okay, I will show you the answer. Warehouse rent, not relevant. It is not an incremental cost. Saving on revenue generated by internal team, because you are not going to undertake this operation, then you can save your current revenue, 8.4 million, 500,000 salary plus contribution. That is 700,000 into 12, 8.4 million. If you transfer these employees into the new operation, your current overhead allocation 120,000 could have been reduced to 100,000, but since you are not allocating them to the logistic division, you may not get the opportunity to reduce the cost by 20,000 per month. Per annum, it would be 240,000. Monthly service fee, you can see 9.6 million, 800,000 into 12, 9.6 million. Remember, it is an incremental cost. Then office space renovation, not incremental cash flow. Fixed cost reallocation, not an incremental cash flow. Depreciation, it is a non-cash item and not an incremental cost. ERP system access, yes, it is an incremental cost. Saving on normal loss, 2.4 million, it is a saving. Net benefit is 760. If you outsource this logistic function, you can save 760,000. That is the answer. Therefore, you can recommend go ahead with logistic function. Go ahead with logistic function, right? Then the next part, explain two non-financial benefits to REL for outsourcing the logistic management function to the logistic firm. Two benefits they are asking. Now, REL, if you outsource to the logistic firm, this logistic firm is specialized in that particular area. REL is new to logistic industry. Then you can focus on your core business. You can get the expert service, right? Then you can learn from expert. If you take the logistic firm to your organization, then if they operate 1 year, you can get the experience from them, and then you know how to operate. Technically know how you can get the knowledge. New knowledge can be collected, right? It can be. Okay, I will show you the answer. Look at this one. The logistic operation is new skill area to REL. Hence, REL can learn from the industry best player. REL can experience a smooth and efficient warehousing and distribution process right from the beginning. This is crucial factor for consumer operation. The savings in the normal loss can reduce REL's concern on the good quality and disposal process. It can save management time in internal sourcing options. The management may have focus on the logistic operation as well. Therefore, they can focus on their core business activity. REL need not to have an invest in training and development for the new recruits for the logistic area. Nothing, because other firm will come and manage it and you will get benefited. The logistic firm will monitor the compliance requirements, so REL does not need to monitor the compliance requirement. Those are the benefit of non-financial benefit, right? Then step 4, the consideration that should be taken into consideration before making outsourcing decision. If you're going to outsource, you have to look at whether it is a core activity or not. Generally, we will outsource non-core activities. Number 2, how sensitive to the business operation. Sensitive activity, sensitive information will not be passed to the third party. Then cultural impact. If you are going to a new organization, if they come and do the operation in your company, you have to see whether those cultures will be matched or not. If third party comes and operate in your system, are there any security issues you need to consider? Security issues. Thirdly, if they come and operate, right, whether they will give an opportunity to improve the talent in-house. Those are the considerations you have to think about before making such decision. Then next one, look at the next one. Suppose REL received a proposal from a customer to fulfill a special drawing job for its architectural division. The customer would pay 140,000 for this job, and the estimated architectures required 10 hours. Okay. Currently, REL's architectures are fully utilized, and the standard data for the jobs performed is as follows. Look at the standard job detail per job. Selling price 50,000, labor cost 4 hours at 5,000 per hour. Now you require 10 hours. Then 5,000 into 10 hours is your labor cost. Variable overhead 8,000. That means 4 hours, 8,000. 1 hour, it is 2,000. Right. Advice if REL should accept this offer or not. We will quickly work out. Like we can quickly work it out. Right. Revenue of this offer. Revenue. They have offer 140,000. Right. They have offer 140,000. We'll take direct labor of cost of sales. Direct labor. You require 10 hours each at 5,000. Right. Then it should be 5,000, 50,000. Direct labor cost is 50,000. Variable overhead. Variable overhead. Variable overhead. 8,000 for 4 hours. Right. You require 10 hours. Right. It is 20,000. Now, if you already these employees are fully engaged. If you take these employees out, right? Currently, they are generating 22,000 margin, profit margin. If that means 4 hours, if they work 4 hours, they will generate 22,000 contribution. If you take out 1 hour, you will lose 5,500. Then if you take 10 hours, what is the opportunity cost? Because they are fully occupied, Then you have if you taken out these employees, definitely you have to, you will lose this contribution. Therefore, you have to calculate opportunity cost, Lamai. Opportunity cost. Opportunity cost. Opportunity cost is currently you are earning 22,000 for 4 hours. Now you need to take 10 hours. How much is it? 22,000 divided by 4 multiplied by 10. it will be 55,000. Now, if you take the answer, you will end up with 15,000 profit. What you will say? After considering opportunity cost and all other costs, you will end up with the net profit of net margin 15,000 from this offer. Special job, accept. If you accept this offer, you can get additional margin of 15,000. Your answer should be accept this offer, since it will give a net margin of 15,000. Right, guys? That's done. That is question number 6. Now we are moving to the last question of the answer. Last question. Right. PDK Holdings Private Limited, PDK, is a construction and engineering company engaged in piling work. Its main work includes ground preparation, drilling, and making boreholes and filling the boreholes with concrete or grout together with reinforcement steel. Right. PDK retains very few essential equipment and hires the rest of machinery and equipment required for the operation extremely from equipment supplier. This is the decision theory part, 15% risk and uncertainty. PDK signs contract with the equipment supplier annually before the commencement of the year. Okay. PDK is in the process of entering into a contract with the equipment supplier for the forthcoming year. The equipment supplier has agreed to supply 3 different levels of machinery and equipment requires, namely high volume, medium volume, and low volume, which will be required by 3 different levels of construction work: high, medium, low. A high, medium, low, there's a construction work, and 3 types of machinery is required for each one. Based on the above information, the following summary has been prepared. Balan. Expected level of construction high, probability is 20%. Construction revenue will be 1,000 million. Required machinery will be high volume machinery. If high volume machinery you have to take, it will be 200 million. If it is medium volume construction work, 50% probability there, revenue will be 600 million. You require medium volume machinery. If it is low, it is 30%, you will get 250 million revenue. Low volume machine required at a cost of 60 million. That is the ratio. My similar kind of illustration was there in the previous exam as well. Right. In accordance with the contract, PDK is required to make the first fixed annual payment to the equipment supplier according to the contracted volume. Okay. However, PDK is entitled for a cash rebate from the fixed annual payment when ordering lower volumes of machinery and equipment than agreed in the contract, while premium is charged for when more volumes are ordered than is agreed in contract. Assume if you have ordered 10 machinery, or 10 machinery, if it requires 15, now additional 5 machineries you have to pay a premium. Likewise, in this situation, if you require high machinery, right? If you require high machinery, but if you order medium machinery, now you have to order high machine at a higher cost, additional premium cost. Likewise, if you have ordered a high machinery, but construction work is medium, there's no issue at all, right? We'll see. Such cash rebates and premium amounts are given below. But volume of machinery and equipment, if it is high, level of construction is high, there's no issue. You have ordered a high volume machinery, but you have received the construction of medium, you will get a 5% rebate. If it is low, you will get 10% rebate on the machinery cost. You have ordered a medium, but level of construction work high volume. If it is high volume, you have to pay an additional premium of 100 million to get the additional machinery. If it is medium, there's no issue. There's medium, required medium is the construction work. If it is low, if you have ordered a medium volume machinery, then 5% rebate will be there. If it is a lower machinery you have ordered, but construction work is high, you have to pay a premium of 215 million. If you have ordered the low machinery, but construction is medium, you have to pay 165 million premium. If it is volume of machinery is low, construction volume also level of construction is low, then there's nothing to be paid or no rebate. Variable construction cost equivalent to 60% of the construction revenue. This is the construction revenue. Okay. You are working as the management accountant of PDK and have been asked to advise the management of the company. You are going to advise. Prepare a summary of forecasted profit earned by PDK for forthcoming year for each possible outcome. That means you need to prepare a pay-off table. Pay-off table. Shall we do that? We will prepare a pay-off table. I am going to prepare a pay-off table. This is very important because each and every aspect what we learn will be tested in the exam. Therefore, it is much important to practice, right? I'll take, this is level of construction work. Construction. Level of construction work, it can be high, medium, low. Then volume of machinery. Volume of machinery. High, medium, and low. Right. Figures are in rupees million. I will figures are in rupees million. If you work out this illustration, these are the outcomes. 1, 2, 3. We have to find out the solution for this particular area. Right, there are 9 outcomes. Right, there are 9 outcomes. We will look at if volume of machinery high and level of construction work high. Right. I will place this as 1. This is as 2, 3, 4, 5, 6, 7, 8, 9 outcomes will be there. Now outcome 1. Outcome 1. High volume, high level of construction work. Right. Well, outcome 1 again. High level of construction into high volume machinery, high volume. This is the arrangement. If this is the arrangement, the revenue 1,000 million. Revenue 1,000 million. 1,000 million. Variable cost will be 60%. Variable cost 60%. Into 60% and 600 million. Right. Then contribution 400 million. So, 400 million is the contribution. Contribution. Now, if you hire a fixed charge, okay, or fixed rent, if you charge a high machinery, high volume machinery, you have to pay how much? You have to fix charge of how much you have to pay? Fixed charge of 200 million. High volume machinery, you have to pay 200 million. Rebate. Okay, if you want, I will take the information, copy and paste it to you. Right? High volume, high level of construction, no. We have to state the figures in rupees million. Yes, you have to state the figures in rupees million. Otherwise, you can, because these figures given in rupees million. High volume machinery, high level of construction will no rebate. There's no rebate. Right here, no rebate. Then you have the profit. Net profit. Net profit. Sorry. $200, right? 200 million is the net profit. Outcome 1, your net profit should be 200 million. I'll put this is 200 million. Outcome 1, I have worked out. It is done. 200 million is the profit. If you order medium volume machinery, but high level of construction work, right? Right. Your high level of construction work and outcome, this is outcome 2, right? This is outcome 1, this is outcome 2. We look at outcome 2. Outcome 2, high level of construction, sorry, level of construction work high, and you have ordered medium volume of machineries, right? Revenue remains same, it will be 1,000. Variable cost also same, 600 million. Your contribution will remain same, it is 400. Fixed rent, yes, fixed rent is how much? 200. Whether you will get the premium or whether you have to pay additional money. Because if your construction work is high, medium is the machinery you have ordered, okay. High level of construction work, you have ordered medium value, then you have to pay additional premium of 100 million. Then it is not 200. 200 minus another 100 million you have to pay. Then it becomes 300 million, right? Additional premium. There's no rebate. Then you will end up with 100 million, right? Is it 100 million? Fixed rent, give me a second. You have ordered medium volume machinery. If it is medium, it is 150. So it should be 150. 150, you can't take it. 150, you have to pay medium volume machinery, but additional premium of 100. Then it should be 250 million. Net profit will be 150 million, and then 150. Done. You will order low volume machinery, you have to pay machinery charge 60 million only, right? Outcome 3, we will take outcome 3. High level of construction work, you will order low volume machinery. low volume machinery. Construction revenue variable cost, these will remain unchanged. But you have purchased 60 million worth of machinery minus additional premium you have to pay 250. It becomes 275 million. No rebate at all. The outcome should be one word. I am not doing an English class, Lamai, right? You can write out, right? Outcome. Yes. Now there is the matter. No? Now we'll see. But just I have typed. You can work out quickly. I hope you can understand. Then I'm not going to do remaining tasks. Then it should be 125. Right. Clear. That's how it will work. Second part, if you have a high level machine, volume of machine, but construction volume is medium, right? Construction volume is medium. Then if it is medium, then outcome 4, you will get 5% rebate. Machinery value is 150. Okay. Construction work, I will take that table as well. Right. Now, outcome 4, medium level of construction, the value will be 600 million. Right. Outcome 4, medium level. I will say medium and volume of machinery high. I will say high and medium. I will take like that, shorten. The revenue will be 600 million. Variable cost anyway 60% of it. Then you can take the contribution. Now you will order medium volume machinery, that is 150 million. Right. Sorry, high volume machinery, 200 million you will order when the construction level of construction work is medium, right? It is 200 million. But you will get a rebate of 5% because level of construction work is less than high volume. It is a low medium volume construction. Therefore, 5% reduction of it, this one. 5%. It is 10. Right. This should be a plus one because it is rebate mean reduction. Then you can take the value. Rebate mean you have a discount. Then its value should be 50. Your value should be 50. Likewise, remaining values, can you work it out? Then next one, you will order medium volume machinery when the work is medium, right? Same information, copy and paste it here. Medium volume, you will order medium volume machinery, that is minus 150, no rebate, then you will earn 90 million. Right. Then you will order medium volume machinery, right? Construction work is low. This is not high and medium, many. Then level of construction work low, and equipment are medium. Level of construction work is medium, that is 600 million. This is also say 240. Fixed rent, definitely it is 150 million. There will be a rebate. There will be a rebate. Rebate how much? Sorry. Volume of machine, sorry, not a rebate. Volume of machinery low, work medium. Then 165 million you have to pay additional. Additional 165 million you have to pay. There's no rebate at all. Then you can take the total. Is it 75 million? Quickly work it out. Volume of machinery low, level of construction work medium. It's 15. Yes, it should be 15. Right, 6 outcomes we have worked out. There are 6 outcomes. Balance, shall we work out balance period, balance gauge. Now you have the low level of construction work, right? Low level of construction work, and you will order high level of machinery and low level construction. Your construction revenue will be 250 million. If variable cost 60% කියලා කියන්නේ means 150, then contribution will be 100 million. Then if you order high level of machinery, you have to pay 200 million minus 200 million. Then you will get a 10% rebate of this, that is 20 million. Then you will end up with 80 million loss. 80 million loss here. 80 million loss. 80 million loss. Outcome 8, your level of construction, medium and low. Medium is the level of machinery required you purchase, and construction is low. Revenue 250, variable cost nothing change. It is 100 million. Then if you have ordered, then you will get 5% rebate on the machinery value. 5% rebate. You will order a machinery at 150 million. 150 medium level machinery. 5% rebate, it will be 7.5 million. Then value should be 42.5. Here 42. It's a loss. Last one, low volume machinery and low volume of construction work. L and L. Then machinery 60, 0. 40 million profit. 40 million profit. That is how you can calculate payoff table. I have calculated the payoff table. This is your payoff table. Remember, these are the outcome, possible outcome that you can see. These are the possible outcome. Right. First part of the illustration we have done. First part of the lesson, 9 months. Then next one, what they ask. what they are. Advise PDK on the best volume of machinery and equipment that should be contracted for the forthcoming year based on maximum expected profit. Based on maximum expected profit, you have to calculate, right? What is the expected value? Expected value. Okay, we will calculate the expected value. Now you have the probabilities given. Here, expected level of construction work, high, medium, and low. So probabilities given. Now we will include probabilities there. Level of construction work, right? Level of construction work, we have assigned some probabilities. We have assigned probabilities. Right. Then we will level of construction work, probably we will say probabilities. Here it is 20%, here 50%, and 30% probability that low construction volume. Then if we calculate the expected values of this given information, we will calculate the expected values. High volume, profit will be 200 million, probability 20%, then it is 40 million. Medium, profit is, medium volume machinery profit is 150, high level of construction work, probability is 20%, it is 30. Right. Then next one, 125 into 20%. 25 million expected value. Then assume volume of machine high, medium, and low. Medium level of construction work, it is 50% probability there. 50% probability. 50% probability. Then low volume of machinery, medium volume of construction work, 50% probability. Now we have to calculate the expected value. This one, 80 million loss, probability is 30%. 42.5 probability is 30%. 40 million probability is 30%. Right. If we take the total of these probabilities, it should be 100%. Same as here you can calculate expected value. Expected profit always. You can take the total. If the volume of machinery, if you take high volume 41, if it is medium volume 62, if it is low volume 45, what you need to select? You need to select this one, medium volume machinery, because it gives highest profitability. It is 62.25. Right. Therefore, you have to order medium volume machinery. Why? It gives the highest expected value. That is the answer. Highest expected value. Right. That is the answer for that. Highest expected value. Last one. PDK is considering employing a research firm that will be able to confirm in advance the level of construction work that could be available in the forthcoming year. Assess based on the expected value, right? Expected value, the maximum fee that advisable to pay by PDK at the research firm. This is reference to the, if he says that value of perfect information, right? Value of perfect information. Value of perfect information. Now, as we have calculated the expected values there, right? Here 40 million, 30 million. Likewise, if you know it perfectly, right? You can assess If you order, if it is a high volume of high level of construction, the optimum profit that you can earn is 40, right? It is 40. If you have perfect information, if high level of construction work is known, then it is, you have to order high. If you know it is medium level of construction work, the highest expected value is 45, right? 45 million that you know. If it is low volume construction work, if the best option you need to select low volume machinery, when there's a low, the expected profit is this much, right? If you know the perfect information, if high level of construction work there, you will get 40 million, right? If you know the perfect information, if it is medium level of construction work, the expected value is 45 million. If you know the perfect information, level of construction work is low, your expected value is 12 million. If you take the expected value, if perfect information available would be 40 plus 45 plus 12. You have to take this one. 97 million. But at the moment, you have select which one? 62.25, because you have calculated the expected value, because you don't know real actual value. Expected value without expected value without perfect information, without perfect information, you have already calculated there 62.25. Then if you know perfect information, you can get 97 million. If you don't know the perfect information, value will be 62.5 million. Therefore, value of perfect information will be the difference, 34.75. Value of perfect information. Value of perfect information is 34.75 million. That means if you are going to engage a research team, this is the maximum value that you can pay, 34.75 million. 34.75 million. Right. That is the end of the paper, guys. We have started around 6:13. By 9:15, we have completed in a rapid manner. And this is the answer. If you have computed, this is the answer. We have done the calculation, right? Then now you have an idea how to deal with the paper. This is not a difficult subject. You can easily attempt. The best thing you need to do is you need to practice more and more illustration. Do past papers, refer your study pack. Beyond the study pack, nothing will be tested in the exam. If you refer the study pack properly, go through it, and you have a limited time for your final exam, spend time wisely, then you can easily complete your exam. You can easily pass your exam, right? If any questions, I will allow you to raise if you want. Otherwise, we can wind up the session, because we are virtually discussing, and I think it would be a fruitful session. Plan your studies and analyze the past paper and prepare for the final exam. If you have any question, let me know. If not, we can conclude. Right, guys, thank you. What is the most suitable question to start in the exam? In the planning and reading time, the most easiest question is to start the illustration or paper. most easiest question while you're reading. If you while you can understand, this is more easiest to attempt in the first, because at the first question, when you're taking the first question, you have some kind of temptation, or you can some like exam condition, you can feel that one, right? Then you might have afraid to take the illustration, and some kind of fear is there. But at the first, you have to select the easiest question, then it will be automatically build your confidence. Don't take 20-mark question in the first step, but you have to read and select the easiest question to start the paper. Then it will automatically build your confidence when you have completely done it. If you know that you have done it properly, then it is automatically build your confidence. Remember, you have 180 minutes to write the answers. Each mark you can allocate 1.8 minutes, and if it is 10-mark question, don't spend more than 18 minutes. If it is 20 marks question, you should spend 36 minutes, right? In the first MCQ, you have to complete within 30 minutes. You can save some time, right? 30 minutes mean then saving time. Time management is most critical and important. How helpful for the student practice revision kit? So there are doubtful question answer in revision kit. Whom shall we refer those? Actually, I don't know whom shall we refer, but there are suggested solution as well given in the revision kit. We can't predict what question, because you have to prepare for the all the area. All the areas will be tested, Lamai, not selective learning. You have to go through each and every area. Refer study pack. It will be tested in the exam. It is not beyond the study pack for syllabus. All the questions are based on your study pack, right? Yes, doing past papers and referring study pack will cover all the areas. If you refer the study pack, doing past paper will cover all the areas. That's guaranteed. Don't go beyond study pack. All the content will be there in the study pack. If you want to practice more questions, refer other past papers and any other past papers available in other professional exams. Right. Hope that is done. Wish you all the best. First complete. Yes, you can. It is your preference. First, you can do the MCQ, then 10 marks question. Out of 4 questions, which is the easiest one you can attempt. First, go to the MCQ, then move to the 10 marks question. Then automatically it will build your confidence. Right. Thank you, guys. Wish you all the best in your upcoming examination. Do your best. Don't get panic. Calm. First read, and process costing won't be tested, right? And be prepared. This is the final chance in your exam, and then you can progress into the next level. Thank you very much. We will wind up the session. Aruna, it's over to you. We can wind up the session now. Thank you guys for joining now.